What's up, guys? Welcome to episode 30 of the Block Exploring podcast, News Bytes. With me is Tommy, as usual. And this week we're going to be talking to you. Well, actually, it's a special episode. It's also the first of many to come. It's the Thursday upload. So, let's get into it. We're going to talk to you about Ethereum, and we're going to be talking to you about the SQUID rug pool. Now, current state of the market. Bitcoin seems ready for a rally. It's been kind of down, but it's been like maintaining and consolidating. Ethereum has been breaking all-time highs day after day after day, and for a pretty good reason too. At the same time, Polkadot, so like these kind of other Ethereum competitors, are up big. BNB as well. There's a lot being traded right now. That's the reason why. And Cardano is down 10%, and that was because of the death cross that or at least you can attribute it to the death cross. Yeah. Exactly. But yeah, now this week, very recently, news came out. Ethereum sees its first consecutive week of deflation. Now that's wild. That's exactly what a lot of ETH holders have been looking for. It's a time where a lot of people have kind of been speculating around. So, Tommy, you're big into ETH?
Yeah. I wouldn't say ETH maxi, but I really do like Ethereum, as sort of I think what's widely agreed as the most decentralized of all the blockchain networks that exist. It sort of hits, for me, the balance of this trifecta of what you want in a blockchain network, which is this balance between security, decentralization, and I always forget the last one. Security, decentralization, and what's it called? And block space. There you go.
Mm-hmm.
There you go. That's the third one. For me, Ethereum hits those three components the best, and that's why I like Ethereum. But this whole issue about, not issue, but why this is a big thing, that Ethereum is now at deflationary issuance, which is also a result of the EIP 1559 update, which was huge. I mean, Elias, you remember EIP 1559 was like, everyone was hyped for it.
Oh, yeah.
Everyone,
yeah.
was hyped for EIP 1559 because it signals one of the first steps towards ETH moving into fully proof of stake system, but also introduces a fee burning, which is now now allowed for Ethereum to become a deflationary asset. And why this is a big thing is because if you are looking for what is the most, and usually with currencies and money in general, what people are looking for is sound money. And what sound money means is money that can, people are looking for money that can hold value or at least appreciate in value. Because what we have right now is a lot of fiat currencies that depreciate in value and not a lot of assets, that are stable or appreciate in value where people would want to put their money, right? So
True.
Sound money often equates to strong money. And in the, what's better than a stable asset, an asset that appreciates in over time? Not only does a stable asset hedge, against inflation, deflation goes one step further in, protecting you from inflation and putting you in a better position than you were to begin with. But this first consecutive week of deflationary issuance, marks, something huge for ETH, because it signals, Ethereum, is sound money, and that this is, the amount of activity on Ethereum has created, a deflationary asset alongside this EIP 1559, update. Because without the activity, we wouldn't be seeing this deflationary issuance to begin with. It's only because we have such high activity, so much transfer, so much fee burn, do we then get to see this deflationary issuance.
No, exactly. I think that's exactly also the fee burning and all this We see deflationary issuance just while there's like a certain spike in transaction fees, right?
Mm-hmm.
So it's like the perfect time for it, one
Yeah.
might say.
And what's amazing is how much ETH is actually being burnt, in relation to how much is then being issued.
Yeah,
It's just I mean, clearly we have deflationary issuance now, but we just need to think of the sheer volume that Ethereum moves purely in NFT transaction. Just single applications on the Ethereum blockchain are moving millions,
yeah,
in volume, and that equates to a lot of like millions in fees being burnt just from one application. Well, they're not necessarily decentralized, but an application such as OpenSea,
yeah.
um, they move millions, they burn millions in ETH, and that's just one. There are
Mhm.
hundreds of applications on the Ethereum network that are burning fees now at an exponential rate, and the deflationary aspect of Ethereum will only continue to grow from here on out. So when we start having a debate about Bitcoin v Ethereum, or other debates like what is ultrasound money, what is the most sound money, or which cryptocurrency could represent the most sound money, or asset,
Mhm.
Ethereum is going to be a huge player in this debate, and I think this aspect of Ethereum needs to play more into this discussion, into the debate between Ethereum and Bitcoin as sound money,
Yeah,
because Bitcoin already has cemented itself as as a store of value, and that's the narrative that it runs, that it's Bitcoin community is running with, right? That it's the store of value. It should be the store of value,
yeah,
and most of the argumentation comes from this, that it has a monetary policy that is determinate. It's already been determined. It's an unchangeable monetary policy, right? That Bitcoin has, and
yeah,
that's hence why the value can appreciate over time. But others and I might believe that Ethereum represents a more so sound money, due to the fact that not only does it is it able to maintain value very well, store value very well.
hmm
um, it does one better by being a deflationary asset.
No, absolutely. I think it's also for a lot of people, the reason why they get into crypto is kind of this sense of freedom and also this kind of a sense of, well, the financial institutions are currently dealing as a bad hand, and we want a better way out of this. We want a more decentralized, less centrally governed way to deal with money, and we want to deal with well, the issues we find with banking via projects in DeFi, and we
Mhm,
also want to say in what actually happens to the management and kind of the ecosystem in which we spend our money. And I think
mhm,
that's exactly what we're seeing now is, well, fiat currency is on the brink of experiencing, well, a lot of people agree that hyperinflation, or at least inflation to a high degree, is very imminent. And it's nice seeing this kind of counter reaction from such a large cap cryptocurrency to create a deflationary asset, because with inflation, your money gets worth less, and with deflation, your money gets worth more. Now, that's exactly what everyone wants, I think, when it comes to cryptocurrency, and especially when it comes to investing in cryptocurrency. But then at the same time, I think, moving on to the second topic, it's unfortunate to see that still people in this space get duped. We've said it a bunch of
mhm,
times, but this is, I think, the largest scale in which it has happened over a long time. There was this project basically called SQUID, ticker SQUID, and it was based on the concept of the Squid Game, and it basically had a token issuance, and it would operate very similar to the Squid Game, but only in a play to earn kind of way, all on the blockchain, blah blah blah. But it had one specific feature, which meant that you couldn't pull your money out whenever you wanted to. It locked it up. And this was a red flag for a bunch of people. I mean, with staking rewards, you often have that, like, oh, you lock it up for a certain amount of time, blah, blah, blah. But this kind of Squid Game crypto just full on locked you out of your cryptocurrency, and in 1 or 2 minutes the price dumped from 2.8 thousand US dollars to almost zero. Now, I think it's important just to take a second for our listeners to maybe get some insight from us on how to kind of detect these kinds of well, rugs and scams in the crypto space. The first thing, this kind of Squid Game Binance Chain project did everything right. It had really nice marketing, but what was weird? The you couldn't find the founder on LinkedIn or any social media, and it was clearly a fake name. It wasn't a pseudonym, but just a fake name. The team didn't have any track record. All the communication groups such as Telegram, Discord, etc. They all were closed just after the issuance of the token and just after the 48 time lock kind of took roots. And a CNBC article happened that pumped the price, and right then and there we saw the project blocking tweets and dumping. And this is basically whenever there's such a lack of transparency, and whenever you see that a project on social media is trying to mute its community in a way, I think that's a big red flag, you know?
Definitely.
And this project wasn't small either, because usually you think, oh, that's other people, not me. This was 57.3 thousand followers on Twitter. That's a crazy amount. So it's very unfortunate. Thoughts go out to all those people who got dumped on, who got rugged. But let's just take the time to invest in sound money, right?
Yeah, I think that's probably the best advice. We don't give financial advice, but the best advice anyone can give is to do your own research and probably look for what and invest in what you believe to be sound money if you're interested in owning sound money. You
Mm-hmm.
know what I mean? Because things like Squid Game coin or Squid coin or whatever are obvious novelties, are obvious cash grabs. And when you have something like an anonymous head developer
Mm-hmm.
who's moving sus, you know um there are loads of red flags that you can find in projects. Just if you do everyone says that do your own research, but if you did do your own research and you're not just like gambling essentially and just throwing your money into these obvious rug pools, then
Mm-hmm.
you'll probably be able to see the signs,
Yeah.
right? A lot. I mean, I think there's probably two people like who invest in these types of the people who get duped and the people who just don't do their research. I
Mm-hmm.
mean, and if you're one of those two people, please sort it out. but it's sound money. If you
Sound
care
money.
about that, that's what it's about.
Exactly, exactly.
There's
And
a
I think
great
also,
debate, going on about what is sound money and what is the best sound money around. Get into it. It's
mhm,
fun.
exactly. And also, stay ahead of the herd. And that's
Yeah.
a very cliche statement, but a lot of these projects have like a big following, and there's like a lot of people saying, oh, it's great, it's great, it's great. And this kind of nicely confirms your bias whenever you invest in a cryptocurrency. Watch out for that. Just because a lot of people say it's good doesn't mean it can't be bad, doesn't mean it can't have its negatives. And I think that's a very healthy way to kind of approach, well, investing in crypto, but also just going about choosing what ecosystems you function in the crypto space, and what kind of projects do you work with. So yeah, I hope you guys kind of learned from this. I hope you guys weren't affected by it.
Mhm.
So yeah, I'm happy to say the Discord has been getting people, and it's very nice talking to you guys on there. So
Yeah,
if you
join us on the
haven't,
Discord. It's let's build something over there.
yeah, exactly, it's really nice. We just talk a bit about everything that happens in news and more. So yeah, tune in. So I think with that being said, that was the end of the Thursday episode of the Block Exploring podcast, and we will see you in the next episode. Peace.
Take it easy.